Welcome to this week's Money Metals podcast, helping gold and silver investors during these treacherous times. Now, here's this week's market wrap with commentary and analysis from the company voted 2015's Precious Metals Dealer of the Year in the U.S., Money Metals Exchange.
This is Mike Leeson with Money Metals Exchange, and it is my privilege now to be joined by Steve St. Angelo of the SRSrocco Report. Steve is an independent researcher and investor who covers the precious metals and energy markets like few others and has one of the best websites in our industry. It's great to have him back on the podcast. Steve, welcome back. It's good to talk to you again.
Yeah, Mike, there's a lot of interesting things going on in the market, so I think we'll have a lot to talk about today.
Well, one of the main reasons I wanted to have you on today was to talk about the supply situation in silver, because it's becoming a very big story, and also because you have such a good handle on what's going on, both in terms of the investment demand reported by your array of industry sources, but also what's going on with mine supply. So there are few out there that are better to comment on all these growing silver supply concerns than you. So thanks for spending some time with us and our audience. Now, I wanted to start out by asking you about mine supply. You have been reporting about the global silver mine production. Exactly what does your research show in terms of how the world's major producers are doing, and what has the output been looking like over the past, say, 6 to 12 months, Steve?
Yeah, normally we would see this information released in different websites, but I haven't seen much of it this year. It's been surprising. But anyhow, one of the more stunning data points came out of Australia, and I look at this information every day, try to find out when they're going to release it, and Australia actually reported a stunning 31% decline in silver production in the first quarter. So in the first quarter of 2014, Australia produced 491 metric tons of silver. The first quarter of 2015, it had fallen to 340. So that is a huge amount, and I tried to contact the website to see if this was just a glitch, but they normally do a pretty good job. Even if they're going to revise that number, I don't see it revising that much. I haven't seen revisions that are that large. So we had Australia, they're down 31%. Now, Peru is the number 2 largest. Australia is actually 4th. Peru so far is up a little bit. I think they're about 3.5% up compared to last year, and that's as of May. Now, Mexico, which is the largest producer, I found this quite interesting. Mexico is down about 7% year to date, but they were down 12% in April and 10% in May. So actually the first couple of months of the year, their production was up slightly. It started to decline in March and really fell off a cliff in April and May. So Mexico is down year-to-date about 7%. So we don't know China's figures. They're the 3rd largest producer. We don't know what theirs are, but I think their production is declining. But if we just average the top 3 of the 4 here, Australia, Mexico, and Peru, I think mine supply is down 6 to 7%. Now, certain analysts were saying that we were going to see a fall of overall supply, and that includes recycling, of about 4%. Well, so far, and I think if Australia continues to show a large decline in the second quarter, I think we will see overall production from the mine supply down 6 to 7%. So if you add on the scrap supply that is falling, it could be even higher, almost double the estimates that they were supposed to be. So this will just cause a little bit more stress on the market as overall supply this year will fall.
These figures may not sound like a whole lot, but I mean, there is not a lot of margin out there when it comes to supply versus demand. Of course, we know demand is soaring, and we'll get to that in a moment, but this could be a pretty big impact if we have that kind of deficit emerging here on the supply side, because that could have some far-reaching implications, could it not?
Yes, and I think the way we need to look at this market is that the market can change on a dime. And we saw that in July when the U.S. Mint sold 176,000 gold eagles, and that all stemmed from the issues coming out of Europe with the Greek exit and also the decline of the Chinese stock market. So investors, when they're very stressed out of the financial system, they really rapidly increase their gold purchases. Now, silver continues to hit all records, demand for silver investment, but again, this is still a very small percentage of people buying. So when you see this supply, overall supply, starting to decline, at a time when this next couple of quarters could really we could see a lot of fireworks in the markets, as we're already experiencing. It could become even worse. Total demand could totally outstrip supply if investors really start to get worried about the financial system. So it could virtually happen overnight.
What are the repercussions of a dwindling supply deficit in the face of massive demand? I mean, as they say, shortages beget more shortages, as industrial users will likely begin hoarding it if they haven't already been doing so. It seems that if concerns develop that silver will be unavailable, the situation could accelerate and create some real issues. Do you envision that sort of thing happening? And how would we know if we are close to that?
Well, I think we're starting to see it, and there have been several, I call them tremors. There have been several retail, huge spikes in retail silver and gold demand, and that started in 2008. And of course, this all happened after we had the first initial shock of the financial system, when we lost the total U.S. investment market system totally imploded. And we're talking Lehman Brothers, that was around since the Civil War. So we totally lost the investment banking market. It imploded. So did the U.S. housing market, as well as AIG. AIG stock went from $1,100 in 2007 to $30 in 2008. Investors need to realize how quickly things can change. Now, another factor is how much silver India is imported. And so far this year, India's imports from January to May are up 61%. Now, here's the clincher. Analysts thought that now the new President Modi has eased up gold restrictions. They thought they would see a decline in silver imports in 2015 because people would buy more gold. Well, that hasn't happened. Matter of fact, they've bought 61% more gold. And the August and September are the big buying months for Indians for their festival, as well as December jewelry demand worldwide. So I think the second half of the year may be even higher imports compared to the first half, which were a record to begin with. So when we start adding up all this data, and then this is the one thing, I think the wild card that isn't even on the radar, and you spoke about it. Institutions, or let's say fabricators, big manufacturers, they purchase silver. And, of course, the largest demand for silver in the world is industrial demand. Even though we'll see a decline of industrial demand going forward, we will still have a lot of industrial demand. Now, in an event of a shortage that goes into the large wholesale shortage, we will see institutions protecting, making sure they get silver. But what I think the market doesn't realize is silver revalues in price. Institutions may stockpile silver, not just to have it to manufacture, but it's also a gaining investment. And so it might behoove them to double or triple their silver quantity purchases because it's now an investment, much different than copper. Copper is a base metal. It will never be an investment per se. So I think, Mike, there is a lot of things that the market does not consider that are, let's say, explosions could detonate going forward, that when this market unravels, we could see a tightness where available silver will be very hard to acquire.
Yeah, all of this is pointing towards the fact that we could see silver premiums spike massively and almost without notice. Now, you've been saying how many may be complacent and view the premium increases in retail minted products as unimportant because it's mainly just a production bottleneck, and that may be true to some extent, or even mostly. But those same people mainly look at premiums on 1,000-ounce exchange bars and argue that that's all that matters, and we haven't seen a premium increase yet on 1,000-ounce silver bars, so none of this is a big deal, they say. But you've made the point that when we do see premiums rise on 1,000-ounce bars, it's basically game over. Explain what you mean there. I
think we need to understand there are two wholesale markets. there's three markets in the silver industry. There's the retail, and let's just discuss retail when it goes to investment. There's retail investment silver market. There is the wholesale that supplies the retail, and then there's the overall wholesale silver market where silver is stored at the exchanges. The wholesalers, they get their 1,000-ounce bars or whatever, and then they make their silver products that are sold to the retailers. And so we are seeing already shortages in the wholesale market. That is the one that supplies to the retail. We are not yet seeing a shortage in the wholesale market that supplies the entire silver market. However, when it starts to move there, when it gets in there, I think it will happen very quickly. And if we're seeing between weeks and 4 to 6 weeks to 2 months delays now on products, that's because they're waiting to get silver 1,000-ounce bars and convert them to smaller products. What happens when they cannot get the 1,000-ounce bars? And so when they say now we have a shortage in the wholesale silver market, it's too late. For analysts or investors to say, well, there's really no shortage now until it goes into the wholesale main market, well, by the time it gets there, then it's too late. And there's very little silver available. I think on the three exchanges, that's TOCOM, the Shanghai Silver Exchange, and the COMEX, there's only 178 million ounces. But that's overall silver. Half of that, or less than half of that, is available to the market. So in a huge increase of institutions as well as large investors and hedge funds, they could totally wipe out the system in no time.
That leads me right to my next question. I mean, we've had some major fireworks in global equity markets this last week or two, and things are happening fast. But in terms of silver, you recently wrote that a massive amount of ounces came off of one of those exchanges you're just referring to there, the Shanghai Futures Exchange. Nearly 750,000 ounces worth of silver came out of those warehouses in a single day earlier this week, and inventories are down some 40% now from where they were just 2 months ago. What do you make of all that, Steve?
Well, I've been following the Shanghai Futures Exchange silver inventories for quite a long time, and they peaked at about 1,143 metric tons back in March of 2013. And then right after that, we had the huge takedown. We had two huge takedowns in April and then as well as in June and July. And the overall inventories on the Shanghai of silver, it continued to fall towards the end of the year. Then they increased a little bit. But then in the beginning of 2014, they peaked again, but not much. They were only 575 metric tons. Well, over the next several months, they fell to 81 metric tons in September. And we had a build up till actually June. And then June 15th, seems to be the demarcation line when we had we had that event in Greece and the market turmoil, and that's when the switch went off. And we could see it in all the markets. Well, the Shanghai Futures Exchange silver peaked in June 15th, actually on the date, June 15th, at 394 metric tons. Fell into the end of June, and then in one day it fell 23 metric tons last week, which you said, that's a nice size for the COMEX. So what does this mean? Well, it means that we're continuing to see, not only on the Shanghai, but we're seeing on the COMEX, we're seeing a drawdown of available silver in the wholesale market. And the difference is we saw this drawdown take place in 2011. When actually the COMEX fell below 100 million ounces. But the reason that fell, we saw the COMEX inventories fell, it was due to increased investment demand as well as increased industrial demand. Well, we're not having any increased industrial demand these past 2-3 quarters, or let's say 6 months. We're having lower. So all the drain of all these warehouses on the exchanges is due to only investment demand. So this is the beginning of what I see is a global run on silver, and it will get much worse if we start seeing the continual unraveling of the broader stock market this fall.
A lot of people don't seem to understand that, they see all this massive demand for physical bullion, but meanwhile we're seeing prices continue to remain weak. Got hit earlier this week once again. What do you make of that, and when do you envision that sort of dynamic coming to an exhaustion point? Is it when these exchanges default on somebody that wants to stand for delivery, and then the whole price setting mechanism system is set on its ear? I mean, what do you think about all that?
That's a tough question, and of course this is speculation. But the reason why we're seeing so much of an increase in investment demand in the retail market is because wealthy investors, and they can be multimillionaires, hedge funds, don't want to buy 1,000-ounce bars. The investment bar of choice is like the 100-ounce bar or less. And I hear a lot of wealthy individuals are purchasing a lot of the monster boxes of the Silver Eagles, of the sovereign coins. So they're not going to get on the phone, and I hear there are large buyers coming into the market, and they're not buying 1,000-ounce bars. They're going after the investment silver. So the reason we're seeing lower prices, I believe it's due to not only is silver an industrial metal, we're still trading on this paper mechanism. And when we see huge declines in the Chinese markets, in the Asian markets, Nikkei in the U.S., they're getting margin calls, and they're selling everything. So initially, I see the precious metals will fall, their paper price. But as the markets continue to collapse, I do see the metals bottoming and reversing. Now, this happened in 2008. The stock market started to decline, and everything went down. I mean, the price of oil up till today, it's up a couple bucks, but up till today it was $38. I mean, when the stock markets and everything started to fall in 2008, the price of oil was $140, and everything came down in a waterfall. Well, the commodities in gold and silver, they bottomed in October, November, and they started to continue higher. Well, the broader stock markets, they bottomed in April of 2009. So, and I think this will be much different because we have seen such a dislocation in the broader stock market and in the commodities. They have fallen considerably. I don't think there is much more to fall. Even though we could see lower prices, I think we're still looking for a bottom, but the stock market and the broader stock markets are still way too toppy. And as we see this unraveling, I do believe more investment demand will come in, and it will start to override that paper price. There will be a lot more pressure on the physical silver demand and physical silver supply, that it will finally turn around the price.
I know you covered the energy markets, of course, very closely as well, and one of the, I think, main reasons why the metals have been hurt is because they do trade like commodities at times, and oil is, of course, fallen dramatically over the last several quarters. What do you make of the future of, say, U.S. oil production and supply going forward, given these low prices now under $40 a barrel? What do you think we have to look forward to there when it comes to oil production, and what kind of impact do you think that may have on the metals?
Well, I just had an interesting conversation before we spoke with a gentleman who is been in the oil industry for 30 years looking for oil, and do you know what he told me? They're not looking for oil right now. The conventional guys aren't looking for oil, and he's a conventional guy. That's where the profits are. The profits aren't in shale, have never been in shale. But the interesting thing he told me is, do you know what they're doing? They are looking for injection wells for water. And I didn't realize this. The problem he sees, and that is not discussed, is shale oil produces a lot of water. There's a lot of water, and it has to be injected back into the ground. It can't just be thrown in somewhere above ground reservoir. It's toxic. And he says now they're having problems because environmental and issues of where to store all this water. And so not only are we going to see declines in shale oil production because the decline rates are so high. And so when they stop drilling, and that is starting to take place, we will see a huge fall in production towards the end of this year, especially if prices remain low, and into 2016. On top of that, as production declines, less oil is being produced but more water. so they have to even find more places to put the water. This is going to be a major issue going forward, and we may see a double whammy in U.S. oil production because we may run out of places to inject this water, this toxic water. Shale oil production in the U.S. has peaked already, and I want your readers and listeners to understand that. It peaked, and it's either December, January, or in March. So it's done. It was a nice run, but it's over. And so how it declines going forward will be interesting to see. So I think, according to some analysts I'm looking at, U.S. oil production will decline about 33% by 2020, and it could fall more. And we're looking at a 60 to 70% decline by 2025. That's 10 years away, but that puts U.S. oil production maybe at 3 million barrels, 3 to 4. Right now it's at 9 plus, and we're using about 18, 19. What happens if the dollar becomes toast by then? And we can't just trade U.S. Treasuries of dollars for oil. They're going to want real things. So our imports are going to fall off the cliff. And then that's the issue investors need to realize. How do you run the system on that little oil? And then what does it do to all the asset prices of real estate, whether it's commercial, residential, industrial, and the businesses? So the best assets to me to own going forward are not real estate or not businesses, because we're just going to see the values and the activity plummet in the future. So to me, gold and silver will hold their value. And that's why I look at the energy markets, Mike. The energy markets run the system. And solar and wind, even though they help, they're only 3% of the U.S. market, and they'll never grow to the level we need them. So this is a liquid energy run system. And so when liquid energy production peaks, we're going to be in a world of hurt. And the best way to protect yourself from that is, I believe, in precious metals.
It's incredibly interesting times right now, and as crazy as it's already been, it does feel like we may be on the verge of something significant happening. So we'll have to wait and see. And, of course, we would love to check in with you again very soon to get your great insights as it all unfolds. Well, before we let you go, Steve, tell our listeners about how they can learn more about the SRSrocco Report, what it is that they'll find there, and what you've been working on.
Any of your readers or listeners want to come to and check out my site, it's the SRSroccoReport.com, and I put out 2 to 3 articles a week discussing how on energy, the precious metal industry, the mining industry. I will be putting out the quarter 2 break even for the primary silver mining industry, and I don't think it fell that much. So with the lower price now in the silver in the 14, 15 range, I believe most of the silver miners now are losing money. So I encourage your readers to check out the site. I still have a silver chart report that I put out last month, and it's got 48 charts. And if anybody wants an overall look at the silver market and industry, this is a great report. I take each chart and I explain it in 5 different sections of the silver industry. So to get a person who's new into the industry and the market, that's a great report to check out. So I appreciate the time, and hopefully we can do this again shortly.
Absolutely will. Well, thanks again, Steve. We'll be keeping a close eye on your stuff there at the SRSrocco Report. You say 2 to 3 articles a week. It seems like it's been a lot more than that recently. I know you've been very busy, and it's always fantastic stuff. We really enjoy it. And hope you enjoy your weekend and get some rest, and we'll look forward to catching up with you again real soon. Thanks again, and take care.
You too, Mike.
Well, that will do it for this week. Thanks again to Steve St. Angelo of the SRSrocco Report, one of the best metals market-related sites in the entire industry. Be sure to check it out. And check back here next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.